Mutual funds. You hear about them everywhere: banks, YouTube ads, social media, and finance experts. But what exactly are mutual funds? How do they work? Are they safe? And how do you choose the best one for yourself? In this video, I'll explain mutual funds in simple and clean way with real examples. So make sure you watch till the end because this video might change the way you invest. What are mutual funds? Imagine you want to invest but you don't understand the stock market. You don't know which company to choose, you don't have time to research, and you don't want the risk of choosing the wrong stock. Mutual funds solve this problem. A mutual fund is a basket of investment, stock, bond, gold, and other assets managed by professional experts called fund manager. You invest your money, thousands of other people invest their money. All the money is collected and invested smartly by the fund manager. This makes investing simple, safe, and stress-free. How mutual funds work? When you invest in a mutual fund, you are not buying individual stocks. You are buying units of the fund. The price of each unit is called NAV, net value assets. The NAV goes up, your investment grows. If the NAV falls, your investment falls. The fund manager decides which stock to buy and when to buy and when to sell and how much to invest and how to reduce risk. You don't need any market knowledge. The fund manager does all the work. Types of mutual funds. To choose the right mutual fund, you must understand the main types. First is equity mutual fund. Invest mainly in stocks. High risk, high return. Best for long-term goals 5 to 10 years. Example: large cap, mid cap, small cap, and flexi cap. Second is debt mutual funds. Invest in government bonds, corporate bonds, treasury bills. Low risk, suitable returns. Suitable for short-term goals for 1 to 3 years. Third is hybrid mutual fund. Mix of stocks and bond and balance risk and return. Good for beginners. Fourth is index fund. Track a market index like Nifty 50 or S&P 500. Low fee and low risk. Consistent performance. Recommended for long-term wealth building. And the last is sectoral thematic fund. Invest only in one sector like IT, pharma, and banking. High risk and high return. Suitable only for experienced investor. Why mutual funds are so popular? There are 5 strong reasons why millions of people prefer mutual funds. First is professional management. Experts handle everything. Second is diversification. Your money is spread across 3 to 100 companies, reducing risk. And third is low starting amount. You can start with 100 or 500. And fourth is SIP option. Systematic investment plan. Invest monthly and build wealth slowly. And the last is highly transparent and regulated. Regulated by SEBI, fully safe and monitored. What is SIP? SIP is the most powerful feature of the mutual funds. SIP is equal to investing a fixed amount every month. Even only 500 rupee per month can grow into lakhs with time. SIP helps you with discipline and compounding and long-term wealth creation. SIP remove emotional investing decision. How to choose the best mutual fund? The best mutual fund depends on your goals. First of all, define your goal in short term 1 to 2 years, in medium term 3 to 5 years, and long term 5 years plus. Check the past performance of mutual fund where you invest. Look at the 5 to 10 year returns. Then check the expense ratio. Lower is better. Index fund usually have the lowest. Check risk level. A small cap fund have always high risk, and large cap and index fund have always low risk to maintain. Are mutual funds safe? Mutual funds are safe but not risk-free. If you have equity fund, you have to maintain market risk. If you have debt funds, you have to maintain interest rate risk. If you have sector fund, you have to maintain concentration risk. However, they are fully regulated, transparent, and much safer than picking a stock blindly. For beginners, mutual funds are the one of the best way to start investing. How to start investing in mutual funds? Starting is easier than you think. Step 1. Download any trusted platform like Grow Zerodha of stocks. Complete your KYC, then choose your goal for how many years to invest. Pick a mutual fund, start SIP or lump sum investment. That's it. How much should you invest? Start with small SIPs. Increase every year. Stay invested for at least 5 years. Don't panic when market falls. Remember, compounding works only if you stay invested. Final advice. Mutual funds are not magic. They won't make you rich overnight. But if you stay disciplined, invest regularly, and stay long term, they can help you to build serious wealth. So this was the complete guide to mutual funds. If you found this video helpful, Hit like, share with someone who want to start investing, and subscribe for more finance content. And also comment which mutual fund gives highest return of the year.